Bloomberg Audio Studios. Podcasts, radio, news.
Gold continues its upward climb, heading close to $3,000 per ounce, with many analysts thinking the only way is up.
Tariff escalation, buy gold. Debt fears, buy gold. Geopolitics, buy gold.
We also like having gold as a position in the alternative space.
With Africa responsible for around 25% of the world's total gold, will the continent start to see the benefits of the soaring price?
What we've got to do in the mining industry is catch up with the price of gold. We're a long-term player. We invest heavily in growth, organic growth. We are pointing to a 30% increase in production.
On today's podcast, we'll look at the impact the price of gold is having on the continent and why Zimbabwe's gold-linked currency is just not able to keep up. I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. Later on, we'll hear from Mark Bristow. He's the CEO of Barrick Gold, Africa's biggest gold producer. But first, to talk all things ZiG and Zimbabwe, I'm joined by Bloomberg's Ray Ndlovu, who is in Bulawayo and joining us back on the show. Ray, always great to get you on the show. Thanks so much for joining us. Can you first explain how Zimbabwe's currency, the ZiG, which we've talked about on the show before, is supposed to be linked to gold? This was meant to stop currency inflation, right? Has it actually panned out that way?
It's really been a mixed bag in terms of its performance, particularly the fact that that was the key selling point, that it's gold-backed. The idea of being gold-backed really is, as the central bank has put it, gold is the main primary resource that's used to support and anchor the currency, including other precious minerals like diamonds and also cash, foreign currency that's held by the central bank. So that's really the essence of it being gold-backed in that sense. But I think in terms of the expectation that it would end the crisis that has been a common feature in Zimbabwe for the last few years, which we've seen with previous currencies, that really hasn't taken off as expected. So I think, on the ground, a lot of people are beginning to question that actual claim, that it's gold-backed, but yet the currency has lost value and the currency is being unable to arrest inflation. In fact, there've been, in the last quarter of the year, a sharp rise in inflationary pressures, almost, inflation, in fact, going back to double digits. So that already has really spelled a lot of doubt in the minds of ordinary citizens and also, among the business community about the claims of the currency being gold-backed.
Yeah, and Ray, happening at the same time, we've been watching over the past few days, just gold continue to hit new records. If you take a look at, a chart on the terminal, it's close to topping 3,000. So you're saying the ZiG has not been able to get to those records in the similar way that we're seeing gold performing right now?
Yeah, I mean, like you're pointing out, I looked as well at the charts for perspective. When the ZiG was launched on April 5, up to date, it's lost about 95% of its value against the US dollar. In the same period of time, from April 5 up to date, gold has risen some 24%. So there's been no correlation between the movement of the gold price and the rally that we're seeing in the markets and essentially the performance of the currency. In fact, in September last year, we saw the ZiG being devalued by 43% by authorities in an attempt to try and stabilize it because, it was really losing value. So I think that disconnect has been clear, that there are other factors that move the Zimbabwean currency, and essentially it's not gold. And what we've seen is that the irony has been that a gold-backed currency, which is the ZiG, is missing out on this gold rally. So there are other factors which really are affecting the exchange rate and affecting the currency beyond just the gold price.
What are those other factors, Ray?
So one of the things that we've, in our conversations with investors and market managers in the country, has been money supply. They point out to a very tight liquidity squeeze in the economy right now. the economy. Since the devaluation of the currency last September, the central bank hiked its benchmark interest rate to 35% from 20% to deal with excessive liquidity in the market. And that really crimped money supply in the economy. So there's generally a very, very thin volumes of ZiG liquidity. We've seen really the business environment becoming very, very difficult because companies are struggling by and large to conduct commerce in light of very stringent liquidity circumstances. So the consensus really then has been that money supply is what drives the exchange rate in Zimbabwe.
Is there anything that the officials that you speak to, Ray, the central bank, the finance minister, is there anything that they can do at this point then to reassure investors? Because this should be a correlation, right? What can they do now?
I think the position from both central bank and treasury officials that we speak to is that they are keen to maintain this tight monetary policy stance and the tight fiscal policy position at the moment. There's no indication at all of easing of conditions. I think the fear definitely that they have is there will be a run on the exchange rate. The currency will depreciate. That will fan inflation. So it's almost, a situation where they are just keeping everything on hold, and even if it's at the expense of the economy and commercial activity and so forth, the end game and in their view the greater good is that there is some stability that's being experienced in the markets. There's no volatility. There's no sharp spike in inflation, the things which many Zimbabweans for years have grappled with. So companies now really need to begin to relook and rethink, in terms of their workforce, in terms of pay issues, because, this tight position is going to remain.
And they're still sticking by the ZiG as far as you know.
Yeah, the ZiG definitely has not been abandoned by authorities. It remains in circulation and remains supported by authorities. What obviously remains in doubt is at least it existing side by side with the US dollar, because naturally the preference has always been to use dollars. By and large, the message and communication is that there's acceptance or none. The ZiG is here to stay.
Thanks so much, Ray. That's our Bloomberg reporter, Ray Ndlovu, who is in Bulawayo in Zimbabwe. And stick with us. When we come back, we'll hear from one company that's bullish about the benefit for Africa of a high gold price. Part of my interview with Barrick Gold CEO Mark Bristow is after the break. We'll be right back. Welcome back. Today, we're talking all things gold, as global trade wars seem to be helping push the commodity up closer and closer towards the $3,000 mark. South Africa's annual mining conference, Mining Indaba, was held along the backdrop of this gold rally. I spoke with Mark Bristow, the CEO of Barrick Gold, the largest gold producer in Africa. And I asked him about the state of the gold mining industry in Africa. But first, I wanted to know how high he thought gold could go.
Everyone's trying very hard to push the gold price up. What we're seeing is, continuation of de-dollarization fueled by the actions coming out of Washington. And on top of that, we've got challenges in the UK. Europe is not in good place with the French and the Germans, the leaders of the free world, all in a crisis. And of course, Middle East and conflicts in every continent. So gold price has got a lot of upside still. I always say the risk is on the upside, and it's very much intact, that trend.
How much further do you think it has to go? Because some people believe potentially we've peaked.
Everyone has been saying that. You've seen the equities have been softer than the actual bullion price over 2024, but I don't think so. And certainly, there's a lot of reason why the gold price shouldn't go down.
Why?
If you try and look at what it's going to take for us to get back to normality in the global economy today, it's not an easy task. And I think we've seen damage to the US dollar as a reputational currency, and gold has taken that place. Normalize.
What does that mean for Barrick's assets then, and especially on the African continent?
Well, all the assets are very valuable. Whatever assets you got, particularly if you're in gold and copper today.
Right. So you're not planning to exit any of the operations?
Definitely not.
Okay.
No, we constantly look at our core assets because I'm very focused on high quality tier 1 assets, and so there's a market for those non-core assets. But we're a long-term player. We invest heavily in growth, organic growth. We are pointing to a 30% increase in production by the end of this decade, organic growth
at all of your operations
across the group, and that's going to happen without any issuing of shares. In fact, we're buying back shares.
So when are you going to start buying back shares?
We have already started.
Do you plan to continue doing that then?
Absolutely. Certainly where the share price is sitting at the moment, one of the best investments we can make is buy back our own shares.
What do you think? Where do you think the share price then has to go?
I think it's got to go up.
Okay, yes, but then what is your goals then for that?
I think that's the market will judge that, and at the end of the day, what we've got, and we're about to bring out our 2024 results. We have one of the strongest balance sheets in the industry. We were able to buy back our shares, and we're investing all the time in new opportunities. And more importantly, we're about to build out 2 really big mining projects, the expansion in Zambia, doubling production, and then the big gold and copper asset in Pakistan, which is one of the biggest gold and copper mines that haven't been developed yet in the world.
And Mark, I also want to talk to you about another one of your operations that's in Mali. There's been a lot of focus on what's happening, the discussions between the Malian government and also Barrick. What is the next shoe to drop? Where are we at right now in negotiations?
Jennifer, it's been a very sad time for me. I've been in Mali since it was really re-established as a democracy, and I've worked with all the governments since 1992, and I think Mali's got itself in a position where it's really trying to shake out some short-term cash out of the industry, and this industry is the very foundation of its economy. And I think we need to, and so communication, to your point, is really important. We are in communication. We are working and we're making progress, not as fast as I would expect it, but I'm sure everyone is a little cautious because that's what happens when you get on the wrong side of everyone.
So you haven't agreed to a number to paying back any of what?
No, we haven't reached an agreement on anything yet, but we are making progress, and I think that's the positive.
And that was Barrick Gold CEO Mark Bristow speaking with us at Mining Indaba. And thanks so much to Mark and also Bloomberg's Ray Ndlovu for joining us on today's podcast. And don't forget, you can read all of our coverage on gold and all commodities, including Ray's reporting, across Bloomberg platforms now. Here's some of the other stories we've been following across the region this week. Namibia's central bank chief has warned that escalating tensions between the U.S. and South Africa could destabilize its economy, citing the close ties it has with the two nations and the vulnerability of the Namibian dollar, which is pegged to the rand. President Donald Trump, in a February 7th executive order, froze all U.S. aid to South Africa over what he falsely claimed were rights violations stemming from a new land expropriation law, and for South Africa's case in the International Court of Justice, alleging Israel's assault in the Gaza Strip was an act of genocide. And Ghana's special prosecutor has declared former finance minister Ken Ofori-Atta a wanted person after he failed to meet with authorities to answer questions over alleged wrongdoing. Ofori-Atta, who held the position for 7 years from 2017, was replaced as minister last February by former President Nana Akufo-Addo. And you can follow these stories across Bloomberg, including the next Africa newsletter. We'll put a link to that in the show notes. This program was produced by Adrian Bradley. Don't forget to follow and review this show wherever you usually get your podcasts. I'm Jennifer Zabasajja. Thanks as always for listening. We'll see you next time.